Hey guys, welcome to this lesson where I'm going to teach you how to build confluences with order blocks, right? So as you can see from the screen, I've got about 3 examples on how you can build confluence with order blocks. The first one being building confluence with order blocks and the Fibonacci levels, and then we've got the next one of order blocks with imbalance, and then the last one order blocks with the ICTQ zones, right? So usually I use this a lot in my trading. Actually, not a lot. I use this all the time, right? To enter my trades. I use this all the time to enter my trades. If I don't build my confluence with Fibonacci levels, then I'll probably build it with imbalance or with ICTQ zones. So what's the difference, right? What's the difference? And then I'm also going to show you guys whether it's something that you can use, combine the confluences, right? You can combine these 3 confluences and give you some examples on the charts, right? So the first one being order blocks and Fibonacci levels. What do we look at, right? So what we look, obviously, we look for the 2 things, which is order blocks and making sure that order blocks are within our optimal trade entry levels of the Fibonacci, right? So before I delve deep into this, right, I just want to highlight something. First of all, what you see amongst these 3 patterns is a consistency of the swing and the pullback structure, right? So I've covered a lesson on the swing and the pullback pattern in the free course. Make sure you do watch it because it's going to give you more clarity on how to trade the pattern, right? So as you can see, what I look for obviously is price breaking structure to the downside and then swinging to the downside, right? Displacing price, and then I look for a pullback within the swing and then jump on a continuation, right? As simple as that. So this is the price forming a low, price going up for a high, price breaking that low, price retesting into the swing and then pushing to the downside, right? So this is a consistent pattern that I look for, and this is what I build my entry off, right? All the time. This is an amazing pattern. Once you test it, it's something that works all the time, guys. Something that works all the time. So among us, there's 3 patterns, right? We've got the first one here where we have got an order block formation. Order block obviously breaks structure to the downside massively, right? Once the order block breaks structure massively, what do? I get my OT levels between the swing high and the swing low and try to look for optimal levels, which is 70, 79, 88, and also 60 that I didn't include here, but it's something that I also look for, right? So I look for order blocks should be lying within these optimal levels. That's the first confluence, right, for my entry. And once order block is lying within those levels, I jump on it straight up. And then the next example, confluence is order blocks with imbalance. So with order blocks with imbalance, obviously I look for the structure formation, right, swing, and then the pullback, make sure that it breaks structure, make sure that price has been displaced, and then I look for imbalances before the break of structure, right? I look for imbalances before the break of structure, and then also look at an order block before the break of structure. So as you can see, I think I've mentioned in my free course that I do identify order blocks as levels of supply and demand, obviously depending on whether it's a bullish or bearish order block. So in this case, I just write supply and demand, and I explain why I do that in the video. So make sure you go watch that video to understand why, right? So because most of you go like, yo, you identifying an order block, but I said it supply zone, doesn't make sense. So there are reasons to that. So in this case, we see price forming imbalances and leaving an order block up here. What do? I wait for price to come here, fill up the imbalance, tap into the order block, and then push to the downside. As simple as that. So that's my confluence. And then the next one that we have is order blocks and ICTQ zones. This is one of the most consistent patterns that I've seen, right? Where we see price obviously break structure to the downside, right? Break structure, taking out this low, leaving the high, forming a new low. What do I look for? Price pulling back into this zone, right? Reaching this order block. Once price reaches this order block, right, I look for the next Q zone and say, okay, are we currently in the new Q zone? Yes, we're in the new Q zone. If there's any liquidity that's been formed, inducement, right, some form of inducement liquidity has been formed here, I look for price to grab that liquidity and then shoot to the downside. As simple as that. So I know that it's convenient that price gets to this level on the order block and then the Q zone is open, right? So structure itself tells me that we need to push the downside and we've reached a significant level, and then the time is also confluent, right? So this is what we call price and time theory, where we know that price and time, they complement each other in trading. So in this case, we've got time coming in, right? The right Q zone comes in and then just pushes to the downside. So these are the three confluences with order blocks that I usually look out for. One with OTE levels, another one with imbalance, another one with ICT Q zones, right? So I make sure that I'm looking for any of these reasons to why I should enter a trade, right? So let me jump into the charts and show you guys how I build confluences on a real chart. Right, so here I've got a couple of examples that I've highlighted, but I would definitely go further, right, to show you guys some random examples, right, just to show you guys how it works. So here we got an example, the first example that we have, right? So obviously, let me try to draw up this. Okay, perfect, right? So on the first example, it's gonna be an example based on ICT Q zones, right? ICT Q zones as the confluence with order blocks, right? So what we have here is that we have price swing to the downside, right? Comes and fill up the imbalance, right? Price comes here and fill up the imbalance. Even though we didn't have an order block, what I want to show you guys is the convenience of price and theory, or price and time theory. I mean, where we see right at the moment where we reach price and fills up this imbalance, pulls back on this, what happens right here? We see an energetic move to the downside, right? Because this is a New York Q zone. So this is London, right? London, and then we got a break. So let me try to do all these. Okay. Okay, perfect. This is what we have here, right here, right? So we have price, obviously, consolidating the Asian range, leaves the Asian lows line right here and wiped, and then we see price push to the upside, goes and fills up the imbalance, right? Fills up the imbalance, and then we get this indecision candle. Right, sorry for that. We have this indecision candle that's lying right here that we could have used as a block, right? Because if we do go on the lower time frame, that's definitely a block. Let me try to see if we can go below that level. Okay, so okay, apologies for my screen, guys. It's quite a bit slow today. I don't know whether it's because of the internet or something like that. But yeah, today it's quite slow. So let me try to drag this down here. Right, let me show you guys what I'm looking at. Okay, perfect. So right here, what we have, it's the 5 minutes, right? So if I try to zoom in, try to widen up my analysis like that, and bring down the charts. So we've got like a 15 minutes time frame, right? 15 minutes time frame imbalance line up there, and then what do we have here? We get an order block right here, right? We got an order block right here, very small piece right there, right? Small piece right here. So what happens, right? So here we have price. First of all, I don't know, I keep on making that mistake. So here we've got price push to the upside, right, to fill up the gap. So here we have a swing from there to down here, right, because price consolidated a bit here. So we got price leave that block, right, push into the downside, the supply zone, and then what happens? Price starts to retest around this zone. And once price reaches here, right, once price reaches here, it was so convenient that during New York, when the New York Q zone open, what happened? Price starts to push to the downside, and then just starts to push heavily to the downside, right? So this is confluence of price and time, right? At the right time, price moves. As simple as that. So price here waited for New York Q zone, and then we had to push to the downside, right? So this was quite convenient for price. And then another example that I might have put up is this example right here, where we have price obviously leave this. We had this order block right here, right? And then below here we had imbalance, right? So this is an unscripted example. I'm sure you've noticed. So here we had price obviously right, from this block. And then once price pushed to the upside, right at New York, what do we see? A swing to the downside. As I said, guys, initially in the video, I said this is one of the most consistent patterns. Price is gonna get to a block and then respects it massively, right? As you can see, just respects it massively during the New York Q zone, just pushes down, right? And it doesn't only happen in the New York Q zone; it also happens during London. So as you can see here, we had a supply zone. Okay, we had a demand zone, right? During London, what happens here? Consolidation, and then just pushes to the massive. Even though it was during a break, it was a London Q zone, but it starts to push it down, pushes to the upside, right, after reaching these levels here. So okay, so another example is this right here, right? So as you can see here, we had an order block, right, that we're gonna identify as the demand zone. Price was consolidating, gets into this demand zone right during the New York, right? At this point, right during the New York, what happens? We push to the upside, spring to the upside, and then price just pushes to the upside, right? So price always does that, guys. It always does that. So as you can see here, demand zone, price comes, Q zone, shows to the upside. And then here we have another block, right? Price comes to this block right at New York, and then it chooses to the downside, right? So these are just rough examples and a bunch of examples that I'm giving you guys, right? And then another example, obviously, is this one that we have here. So we have this example right here. Price getting to the supply zone, taps into the supply zone right during the London close, it shoots to the downside. So it's not only in the New York Q zone, right? Even though the example initially was in the New York Q zone, it's not always the New York Q zone, right? The confluence is always in the Q zones. So just make sure that the Q zones are open at the time and price it's on a block and structure is confluent with price. If structure is confluent, if you're in a downtrend and price pulls back obviously into the previous swing, you should expect a continuation to the downside. And if it's in a Q zone, that's further confirmation that price is pushing to the downside. So yeah, this is on the Q zone confluence, as you can see, guys. And now I'm gonna show you confluence built on, and then this was also an example of order blocks and imbalance. So I actually showed you two examples here. Né? I showed you an example of order blocks and ICT Q zones, also order blocks and imbalance, right? But I'm gonna show you more examples. So let me jump into order blocks and the OTE levels, right? Order blocks and the OTE levels. So let me try to clear up this chart right here and start afresh. Okay, perfect. So first example that I can see off the top of my head is this right here, right? We get a swing level from this point, right? From that point to that point. And then I obviously identify my order block, which is that right there. Identify my order block right there as my supply zone, right? Identify my supply zone, and I draw my Fibonacci level, obviously, from that point, swing to the swing. And then what do we have? Right, we got price reacting off this block on the 88% OTE level, and then just shoots to the downside. So what I tend to look for, obviously, guys, is I look for price to react off these OT levels. So I look for order blocks within, or order blocks that are confluent with these OTE levels, right? I look for order blocks that are confluent, these OTE levels to be respected, and then just shoot to the downside, right? So that's an example, price respecting OTE levels. And then the second example that I'll see on top of my head is this right here, right? So this is one of the most recent trades that we took today, right? We took actually yesterday on the 7th of September, right? So we got the swing from this point until this point, price breaking structure, right? We get a swing from here until this point, price breaking structure, and now draw my Fibonacci level from there to there. And then in this example also, we see price respecting the 88% OTE level, and I'll draw my order block right there. So as you can see, I've got my OTE level being respected, I've got my order block, right? So this was a perfect example. And as you can see, within these levels, I didn't have any order block, right? So within 79, 70, and 60, I didn't have it. but within 88 I knew I have it. So it's an OTE level. It's confirmed the price is going to come in. Once price came here, just massively continue to the upside. So as we can see, going further into this pattern, right, I could identify another swing from here to up here, right? So if I do highlight it like that, what happens, right? So let me try to go further if I can get the 3 minutes time frame. Hopefully I can. Okay, perfect, I did. So what do we see in the 3 minutes time frame? We see a proper OTE setup again, where we see price coming into this OTE level of 70, and it's amazing how it works, guys. Just check this out, right? So price swings to the upside, break structure, obviously the typical swing and pullback move, right? Price swings, pulls back into our OTE levels of 70, and then it just shoots to the upside, right? Just massively shoots to the upside, right? So this is an amazing example also on the OTE levels and order blocks, right? So make sure you identify your swing. Identify your swing, you set your OTE levels. After setting your OTE levels, and then from there, identify your order block, wait for price to come to your order block and OTE level, and then just respect it. So yeah, guys, those are the three actually confluent examples that I do have, right? The first one is order blocks with OTE levels, the second one is order blocks with imbalance, and the other one is order blocks with ICTQs, right? So make sure you do back test them, make sure you test them on your charts. You see how you can identify them, see which pattern is more consistent, and yeah, let me know, share with me the results. And yeah, that's about it, guys. Hopefully this video is helpful. See you in the next video.